Welcome back to Market on Close. Risk off is back on. After a big push to the highs of the session, NASDAQ reverses since we began the show. And with that, Bitcoin turns red again. Let's bring in Scott Bauer, CEO of Prosper Trading Academy. Continue our conversation in the crypto realm here. Scott, BTC having trouble getting back above that 30K big round hole number. What happens if it doesn't happen soon?
You probably see continuation to the downside, Oliver. Next area, 25 is a nice big round number. I'm not sure where that next technical number would be to the downside. But, man, it's what, 3-4 years we have had the discussion, Oliver. You and I talk about this all the time of what is its correlation to the market? What is its correlation to interest rate? And, we've really said for quite some time, we don't know what it is. There isn't one. So it's still continuing that way, right? So it is completely, in my opinion, in the wild, wild west right now in terms of what can happen with the next moves. The correlation for anybody saying that it's a store of value, maybe, maybe not. Correlation for it's an inflation hedge, maybe, probably not in terms of what we're seeing right now. So I think it's really anyone's guess at this point. Am I bearish or bullish? I'd probably be pretty neutral overall right now because I think you are going to see some very big dip buyers coming in. But what is the rationale at this point? That is the big question to me, is the premise for what the value of crypto has been for the last few years is kind of eroding.
The correlation in the NASDAQ's been pretty close to 1 since November. Do you think that's going to break away at some point?
No, I think if we see a big rally back in the NASDAQ, you'll probably see Bitcoin coming along with that. Anything further to the downside, I would think the same thing. So I don't think that correlation breaks. And if anything, you can throw out 10, 20, 30 different reasons for how and why Bitcoin has been trading. That is the one correlation that has really stood the very small test of time over the last year.
Sure. Yeah, not even really, about 8 months now or so, to your
exactly.
point. We're kind of seeing it happen apparently as the economy's tightened up and the Fed has been behind that. A dollar curiously down, but we had a pretty strong week last week for the dollar. Gold firming up a bit. It seems like the last day and a half of 2.5 trading days, we've gotten a little bit of a mixed bag here. Any thoughts, Scott, on kind of the short term? It seems like the one thing that has been moving with conviction is VIX dropping, but stocks don't seem able to pick a direction. Dollar kind of wavering. Bonds getting a little bit bid for a change. Well, any ideas on what's going on?
It is a very, very difficult environment, Oliver. I'll be honest with you, to decipher what is next, because we've all been waiting for the VIX to spike, 40 or more. Hasn't happened. The market has continued to decline, even with the big rally on Friday. And we know when we get in a bear market, we see these vicious rallies, if you will. So there's a big disconnect right now. There is a really big disconnect. With the VIX trading at 28, Oliver, that correlates to about a 1.47, 1.5% intraday move in the S&Ps. We have been seeing that. We've probably been seeing more than that. So, maybe the VIX here is right. Maybe we're not going to see that capitulation to the upside, but I firmly, firmly believe until we do, we haven't seen the bottom of the market.
Okay. So until we get that, big capitulation people have been looking for, it seems like our VIX is fairly sticky here, but, down even as the market's down too. So it's not terribly tradable just yet. I mean, I guess if you can, if you think that we're just going to kind of hover, you could maybe short VIX as that 27, 28-ish or, wherever we were at last is predicting pretty big moves, bigger than 1%, right? Like if we just do these 1% moves, VIX is going to come down.
Absolutely it is. The easy way to calculate that, Oliver, on a daily basis, if take the square root of 365, and I'm not going to go into the big math, that's about 19 or so. So if you take the VIX of 28, divide that by 19, that gives you a good approximation of a daily move or what the projected daily move in the S&Ps are. So that is, it's a tough one right now. It really is. It really is.
So about basically VIX here kind of suggesting we need to get more than 1.5% move to keep it elevated where it's at. If we do get any big swing, I mean, what looks like if we get VIX back down to like low 20s that we haven't in a while, is that a time to buy volatility? Is that when we consider the umbrellas cheap for the rain?
Yeah, I actually think that I personally will start buying if it gets about 25. If it got down to the low 20s, I would be loaded up on VIX calls. I would then be watching for that next move to the downside. I don't see how that happens with everything that's on our plates, from Russia, Ukraine, to the Fed, to inflation. I just don't see that happening, because not only do we have to see one of those situations resolve itself, we probably have to see multiple resolve themselves to get this market going again. We're now at the end of earnings season, so the proposed catalyst of good earnings, that's behind us now, right? I mean, we're now looking at next quarter. So I don't know what it's going to take. And quite frankly, when you talk about the Fed, Oliver, and we've had this discussion, I really wish they would rip the Band-Aid off, because to me, that could be the catalyst to this marketplace. But sure doesn't seem like they want to do that. Okay.
All right. Like that, Scott's looking for a drop in VIX as a buying opportunity for volatility. But it might find a floor here if it keeps selling off and make new lows on the day, as the NASDAQ is seemingly going that way right now. VIX slows down its descent a bit in the last 30 minutes. Thanks, Scott Bauer, CEO of Prosper Trading Academy. Let's talk some